What's up, everyone? It's Kadi with MoneyVest. So tomorrow we've got very important inflation numbers coming out at 8:30 a.m. Eastern. I will be live to cover those numbers tomorrow, so definitely do check us out during that time at 8 a.m. Eastern. I will start the live stream. We're going to go over inflation numbers prior to the actual print, and of course take a look at the market's reaction as well. So today, market's very flat. We've got the Nasdaq here up a little bit over 28-30 basis points. We had the S&P 500 also pushing higher, up over 39 basis points, and the Dow Jones pushing up about 157 points on the day. And even though it didn't feel like a green day because Magnificent 7, to be honest, was down the most, it was in fact the only part of the market which was selling off. Everything else was pushing higher, so a little bit of rotation out of big tech, out of Magnificent 7 over to other parts of the market. So we got lots to break down and unpack in this video. As always, if you enjoy it, find it helpful, make sure that you drop a like. I would really appreciate that. And of course, subscribe to the channel if you haven't already. Links to our Discord and Patreon is going to be down below. If you're interested in joining, you get access to all the members only private videos, 40 plus tutorials and lectures, including Excel spreadsheets, find out exactly what I'm buying and selling, updates related to volatility, S&P 500, my watch list, and my fair value, with of course Discord access, over 20 plus channels, trade alerts, and again buy and sell alerts, options alerts also included. And definitely do check out the courses, fundamental, technical, options, and psychology course for lifetime access down below. And definitely do connect with me on Instagram. My handle is going to be CASWRP as well. So going over to tomorrow's consensus, this right here is going to be inflation expectations, something that we have already talked about in one of my previous videos. And the CPI month over month is 0.0%. So no change expected from inflation, and 3.1% on a year-over-year basis. Core food and energy, it is expected to increase by 0.3% and year-over-year at close to 4% as well, kind of in line with those prior numbers. Again, definitely do check out my previous video on inflation expectations, market's reaction, and my probabilities going into tomorrow as well. So in that video, I go over that in more detail. And of course, tomorrow I will be live at 8 a.m. Eastern to cover these inflation numbers. So the Fed and the market disagrees on rate cuts. Here's why. And this is a pretty common theme, something that we have been talking about for quite some time. I've mentioned this on the channel time and time again, that there is indeed a discrepancy between what the Federal Reserve is saying that they will do and what the market thinks that they will do, right? There's a big discrepancy because the Federal Reserve originally was pricing in for one more rate hike in 2023. We're going to find out tomorrow. We've also got the FOMC announcement on Wednesday, I think. Tomorrow is when the meeting actually begins. Whether they raise rates or not or keep them steady, the market's pricing in for rates to be very steady and paused even at a day after tomorrow's meeting. But of course, going into 2024, there is a big disagreement with the Federal Reserve and the market. That's a discrepancy which we have talked about in our previous videos, where the Federal Reserve is only penciling in 2 rate cuts to bring them down from 5.6 to 5.2%, whereas the market's pricing in 4 to as much as 5 rate cuts, bringing rates down to 4 to 4.25%. So that right there is obviously a big discrepancy between the Federal Reserve and the market, and that's why the market carries a little bit of that repricing risk at the moment, which I've also talked about in one of my previous videos. Now, Ed Yardeni from Yardeni Research is targeting 6,000 on the S&P in 2 years because of soft landing. And once again, he's kind of mentioning that Ed Yardeni absolutely buries the hard landers, the gloom and doomers who expected nosedive for the U.S. economy, in a new commentary on Monday. And Yardeni notes there's a litany of valid reasons why the U.S. economy may have sunk that rate hike campaign, the inversion of the yield curve since the summer of 2022, and the years-long falling of the index of leading indicators, the declining money supply in real terms as well. We've provided several explanations for why the hard landers and their indicators have been wrong so far. And of course, they've coined the phrase bond vigilantes as well. And here's a new one. Perhaps the Fed hasn't been tightening monetary policy as much as normalizing it. Interest rates are back to the old normal, and they are back to where they were before the new abnormal period of the great financial crisis and the great virus crisis, and during the Fed pegged interest rates near zero as well. So what he's basically saying is that interest rates are now back to a normal level. This is not tightening. This is back to a normal level before the great financial crisis, because in one of my other videos from yesterday or earlier today, I talked about how interest rates are going to be much longer, according to one of the analysts and economists, especially considering that the bond market basically goes through a 40-year period of generational sort of eras where they trend higher and trend lower, and then now it's time for them to trend back higher. according to that analyst. And but Yardini is basically mentioning that interest rates are back to normal levels, and how we were pegged at higher at 3-4% before the great financial crisis, and of course during that period they were lowered significantly to, of course, support the economy, to help us get out of the great financial crisis and, of course, the COVID crisis as well. The stock market could drop. Be prepared to buy the dip. This right here was another report that was released, essentially talking about how the S&P 500 is up a lot. Trailing 12-month price earnings multiple at 22 times. And, of course, a very concentrated rally in big tech are some of the reasons why a few other analysts, once again, are talking about how the markets could size down a little bit or pull back or correct, which, again, from a technical indicator standpoint, we've talked about how the markets are overbought and overextended. So it's not unlikely for us to see maybe a little bit of a pullback or some type of a correction in the market. But this right here, this is quite an interesting chart, because it basically tells us the stocks that sold off today were Magnificent Seven. Like, literally, this is not even kidding. The entire semiconductor, other sectors, and other stocks were green. Like, industrials were up, real estate, energy, basic materials, utilities. We had financials, we had software, consumer defensives. Everything was up except for Microsoft, Apple, Nvidia, Google, Meta, Amazon, and Tesla. And of course, Eli Lilly also pulling back a little bit. But if it weren't for Magnificent Seven, the markets would have not gotten to where they are today as of 2023. And now we're starting to see maybe a little bit of that profit taking in these stocks, because it's kind of funny that it's only big tech and Magnificent Seven that is actually down, and red, everything else is green around it. This right here, again, is the overall market. And you can see comm services and energy with the biggest losing day. And of course, other parts of the market, other sectors in the market doing really well. And over the last 1 week, it's been a little bit more split, with energy definitely struggling. Energy has been selling off quite aggressively, and that certainly could help the inflation numbers tomorrow in a significant manner. Coffee prices, orange juice, we had lumber prices, live cattle, feeder cattle, oats, copper, all pushing higher, with ethanol, cocoa, lean hogs, and sugar prices selling off, with Bitcoin here just a little bit under 42,000, and Ether just over 2,200 as well at the moment. Now going over to Bitcoin, so definitely seeing a little bit of a pullback after the strong rally. So it's back down to under 42,000. So it saw a little bit of a pullback. Not surprising, because the RSI was overbought. We had seen a very strong rally from Bitcoin, more specifically coming in since middle of October. It had rallied over 67-70%. So I think it's a very common occurrence for us to see a little bit of a pullback here, considering how much it's already rallied in the last 2 months. This right here is going to be Ether. We're already coming up to that resistance at 23,000-24,000. So started to see a bit of a pullback. It was actually much lower before. It actually sold off a little bit over 16-17%, but then quickly getting bought up once again, and of course pushing right back up here. This right here was a big spike to the downside, of course, and we see a longer wick and getting bought up back over to 22,000-23,000 for Ether. And of course, a lot of crypto stocks were selling off on the back of Bitcoin and Ethereum selling off. So we did have Mara down 12%, CleanSpark down 14%, Riot down 11%, Coinbase was down almost 6% as well. So very strong momentum from crypto, but seeing a little bit of a pullback at the moment. Volatility here, on the other hand, again, a little bit muted. Red candle, but was up on the day, so up a little bit over 2.3%. Continues to kind of trade sideways and consolidate in that range. And this right here, of course, is going to be this area of red rectangle, which we have talked about, the red zone, where volatility, if it comes down to these levels, we are coming down to very low percentiles, and it's becoming increasingly rare for the markets to keep pushing higher. So the marginal upside versus the marginal downside is very unfavorable on the long side, is what we have discussed from a risk reward standpoint. And for that reason, I'm not really trading on the long side. I'm not really buying aggressively here. Still, I'm dollar cost averaging into diversified ETFs and index funds. But when it comes to the volatility, just knowing where it is and the fact that it could spike here any day, any time, and of course could draw down the markets here 2-3%, maybe 4-5%, is what's keeping me away from actually buying into the rally that we have seen. So eventually, when we do see a pullback, let's say 3-4-5% pullback or a simple dip, that's when I'm going to start to reload and, of course, take a long trade. Once again, when the VIX is over 18, 20, as much as 25 to 30 levels. Those are some ideal levels on the volatility to be deploying cash and starting to buy once again. Crude oil, on the other hand, continues to trade in this downtrending channel. It has been selling off very nicely. So We have seen consistent lower highs and lower lows, and this right here is going to be the next resistance level to watch for crude oil, and that's going to be sitting roughly at $73, $74 a barrel, and support level is going to stay put at $66, $67 per barrel as well. So this right here is going to be that level. Again, consistent lower highs and lower lows for crude oil at the moment. Now going over to the bond market a little bit, we still have, again, the long end of the curve continues to be somewhat flat to slightly down. I'm no longer in TMF, was able to make a nice 25-30% profit. Again, if you want to get all the alerts, find out exactly what I'm buying and selling, and including options trades and trade ideas, links going to be down below. Would love to have you on board. Did open up a few more spots, and we'll be starting our sale, the Christmas sale here in a few days. But this right here yields definitely coming down, especially the short end of the curve continues to be a little bit more on the elevated side, with the 6 month sitting at 5.4, 3 month sitting at over 5.3, and of course 1 year sitting at over 5% as well. So short end of the curve, anything that's maturing less than 1 year can get you over 5% rate of return, which obviously compared to the S&P 500 is a little better on a risk adjusted basis. Now going over to the market, first talking about the S&P 500 getting a little bit of a nicer breakout beyond 4,600 to 4,622. Very nice move to the upside. RSI is back over 71. But of course, it wasn't big tech who led the rally. It was other stocks, other market participation, a little bit more of a broader rally, because all these stocks were down except AMD and Netflix, which were slightly higher. But everything else had a really, really strong day. If you take a look at RSP, which is the equal weighted index, it was up 89 basis points. So it was actually up more than the actual regular S&P 500, which is quite crazy if you think about the overall broader participation and the market move that we have seen today. So big tech definitely seeing a sell-off, and it's other parts of the market that are now starting to come alive. IWM, this is a sector, an index, an ETF that I really want to start building a position in. It's a little too late because it's already rallied from 162 up over 15-16%. But I don't mind kind of positioning myself into small caps a little bit going into 2024, because I do believe that they have a lot of potential. They've been suppressed all year. Year to date, there's been significant underperformance relative to the S&P and the Nasdaq and the Dow. So IWM and small caps and biotech, I feel like, are some sectors that I will be positioning into going into 2024. A little bit more of an allocation, considering that, in my opinion, tech becomes a very overcrowded trade. And these are parts of the market that are still not appreciated enough. They're still underloved at the moment. So going back over to the S&P 500, so we are seeing a very nice breakout, and the next resistance and target is pretty much the all-time high. Maybe there's one resistance waiting for us at 4,700. So this right here is going to be another level to watch on the S&P. So you'll notice that we got rejected here in the past at 4,730, 4,700. And of course, beyond that, it's going to be the all-time high at 4,800 to watch for the S&P 500. Talking about the Nasdaq, and Nasdaq here also kind of creeping higher from these levels, and of course pushing up above 14,400. The next resistance and target is going to be 14,600. So this right here is going to be that level to watch for the Nasdaq. And again, support level is going to stay put right here. It's going to be a new level at 14,400 all the way down to 13,800 as well for the Nasdaq. So very nice move to the upside. Just got to be careful where we are with respect to the technicals, RSI, MACDs, and of course percentage of stocks trading above and below their moving averages as well. Talking about Apple, Apple got bought up. At one point it was down over 2%. There was a pretty significant red candle, but of course buyers stepping in. So we did see a lot of momentum coming back in. Resistance all the way up to 196, 197 for Apple. So this right here is going to be that level to watch, with the support level staying put at 189, closer to $190 per share for Apple moving forward. So this right here, lower highs and lower lows. Of course, a huge breakout, and we have seen a very nice move to the upside with higher highs and higher lows as well. Talking about Amazon, and Amazon here, lots of consolidation. Resistance is going to be closer to 147. This right here, again, is going to be the level to watch, with the support level staying put inside this green rectangle. That's going to be a little bit closer to $134, $136 per share. But Amazon, for the most part, has just been consolidating sideways in this range. So week after week, it's just been trading in that range-bound pattern, with a resistance closer to 147. And near-term support is going to be 142. I do love Amazon for the long-term growth that it potentially could offer. In my opinion, I've even argued that Amazon's earnings growth could actually be better than Tesla or Nvidia's over the long term, because the revenue is already there. All they have to do is increase their margins. by becoming more efficient, cost efficient. And that's really where the focus is going to be, in my opinion, moving forward for Amazon. So support level is going to be down to 135 to as low as $121 per share. Talking about Tesla, and Tesla here also just consolidating sideways. So what we have really witnessed for Tesla is just a lot of consolidation here. So it's just been boom, 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 trading sideways here. And right now, of course, trading within the context of this lower high and this lower low. So this right here is going to be that downtrend for Tesla. Next resistance, of course, all the way up here. It's going to be sitting at $280 to $320 per share. So this right here inside this red rectangle is going to be a huge wall of supply for Tesla, with a support level sitting right over here inside this green rectangle between $200 and $210 per share for Tesla. Talking about NVIDIA here, NVIDIA also starting to roll over a little bit, 1.85%. For the most part, it's just been consolidating sideways in this range, something that we have talked about. So lots of resistance here, lots of support here in the low 400s, and it's just been trading sideways. It hasn't really gone anywhere. It has had a very strong 2023. Year to date, the stock's up a little bit over 200%, but a very strong support is going to be low 400s with a very nice resistance all the way up to $500 per share. So that $100 range is really where NVIDIA has been trading. Advanced Micro Devices with a huge breakout. Look at that, up over 4%. And look, the stock's just getting started, folks. I talked about this in one of my previous videos, and it is absolutely crushing it, up over 44%. AMD on a year-to-date basis is now up over 100% as well. So congratulations to anyone who's been trading or investing in AMD stock. And the next resistance and target is pretty much going to be at an all-time high at 156 to as much as $170 per share for Advanced Micro Devices. A very, very nice move to the upside, very strong breakout, with lots of momentum coming in for this company. Talking about PayPal, and PayPal here continues to be very, very flat. There's not a lot of volume. I mean, 12 million shares traded. So there's not a lot of activity on PayPal. Support level is going to stay put at $56. So this right here is going to be that level to watch, with a resistance all the way up to $66. And of course, we continue to trade inside this small uptrend and a rising wedge pattern for PayPal as well. Talking about Visa, and Visa here continues to trade at an all-time high, up over 30 basis points, lots of consolidation sideways, with a support level sitting put at $250 to as low as $245 per share. So those are going to be a couple levels to watch, with a very overbought and overextended RSI and MACD at the moment as well. So we continue to trade at pretty elevated levels. Visa is a phenomenal business. I would still argue the valuation is a little bit up there, but technicals definitely do suggest the stock's overbought and of course overextended. So coming down to 250s or even 245s would not surprise me one bit. Talking about Meta platforms, and Meta here coming back down to that support, down a little bit over 2%. So this right here is the green rectangle that we are watching as an area of support. And of course, it continues to trade inside this sort of uptrending channel, so higher highs and higher lows. And of course, a much better support is going to be all the way down here, sitting roughly at 275. And this right here is going to be another level to watch for Meta, sitting roughly at $315 to $330 per share. Talking about Netflix, Netflix here starting to roll over a little bit. Quite an interesting candle. Resistance is going to be at 485, near-term support at $450 per share, with of course a much wider range within which it's been trading. So we got a huge gap to fill over here, potentially that it could come down to fill in eventually $345, $350 with a massive support. But right now, near term, this old resistance is going to act as a new support for Netflix at 450, with the resistance staying put at 485 for the company. Talking about Google. And Google here also down 1.42%, but getting bought up intraday. So lots of consolidation here. Of course, 3 green candles in a row, but also not 3 red days in a row. That's quite interesting because it's been gapping down, and then intraday it's been getting bought up, and that was the same day today. Next support is going to be 126. Would not be surprised if it actually does end up down to those levels moving forward. Talking about Microsoft, and Microsoft here continues to consolidate sideways. So we are seeing a lot of validation at that support at 366, all the way down to $340 per share. $310 is going to be next. And of course, near-term support right now is sitting roughly here at 366 for Microsoft, which it continues to trade in this uptrending channel as well. And last but not least, we got Costco and Enphase. And Costco here with a massive move to the upside after the earnings or earnings expectations, because they are going to be releasing their earnings later this week. So earnings are coming out on Thursday. I've already done a video on Costco with a massive move to the upside. However, of course, very, very overextended, overbought with the RSI out over 76, and so is the MACD, pretty aggressively pushing up. And I think it's just hitting a new all-time high today, $625 per share, up 36% on a year-to-date basis. Phenomenal business. I do think, though, valuation is a little bit of a concern, but technicals definitely are overbought, overextended as well. So just be careful here. Stocks trading at an all-time high right now. Talking about Enphase Energy, and finally, Enphase here. Did a video on them earlier today talking about how they're going to be removed from the Nasdaq 100 index. Resistance is going to be all the way up to this level at closer to 109, 110 to as much as $120 per share. Support level is going to stay put down to 92 to as low as sub $80 per share. I do still believe that my conviction in Enphase is strong for the long term, especially if interest rates continue to see some type of momentum lower. That's going to only help the narrative with respect to demand, earnings, and growth for Enphase over the long term. So hope you all enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Definitely do check out my Instagram. Handle is going to be CastWRP. Fundamental technical options and psychology courses available with the link down below. And of course, do join our Patreon and our Discord with a link down below. Members only private videos, Excel spreadsheets, and Discord access. Everything's going to be available with the link down below. And definitely do connect with us tomorrow at 8 a.m. Eastern, where we break down the inflation numbers. As always, happy investing. I'll see you all in the next video.